The last paragraph, Article 11, Paragraph 7 of the India-US Treaty, deals with a case where excess interest is paid by one party to another one because of the fact that the two are related party. Right? So what happens is, suppose there's an Indian company and there's a foreign company. In normal circumstances, the Indian company would have paid 10% interest. But because of the fact that the foreign company is a related party, they pay 12% interest. In such a case, the difference between this 12 and 2, which is 2%, is the excess interest paid to a related party. And this is something which is governed by Article 11, Paragraph 7. Where, by reason of a special relationship, the reason why I'm paying this 2% more is because there's a special relationship between the Indian company and the foreign company, between the payer, which is the Indian company, and the beneficial owner, which is foreign company, or between both of them and some other person. So let's say if we just extend this foreign company, instead of giving a loan, the two of them, it has another subsidiary, right? This subsidiary gives a loan to the Indian company, and the Indian company, instead of 10, pays 12% to it. So because of this special relationship, if the interest which is paid, the amount of interest having regard to the debt claim for which it is paid, so considering the debt claim, the loan which is given and for which the interest is paid exceeds the amount which would have been agreed upon by the payer and the beneficial owner in the absence of such relationship. So if there was no special relationship, then the Indian company would have paid only 10%. The excess 2% is something which is a subject matter of discussion over here. The provision of this article shall apply only to the last mentioned amount. So this provision will be applicable only to the arm's length interest of 10% and not 12. In such a case, the excess part of payment, which is the 2%, shall remain taxable according to the laws of each contracting state, due regard being had to the other provision of this convention. What this means is, in case this 2% which is excess which is paid is taxable according to the local laws, then if some other provision of the convention, let's say other income clause, provides a beneficial treatment vis-a-vis the domestic tax laws, in those cases those other provision will have precedence over the domestic tax law provision.